dedicato ai portafogli su...
Buongiorno a tutti, stiamo per incominciare, vi chiedo solo 2 minuti di pazienza per attendere che termini la conferenza plenaria. Grazie mille.
Buongiorno a tutti, mi scuso per il ritardo, ma aspettavamo il termine della conferenza plenaria al piano di sopra per dare modo anche agli altri partecipanti di intervenire, quindi pensiamo che adesso sia opportuno dare inizio alla nostra presentazione. Sono Marco Palacino e sono il direttore generale per l'Italia di BNY Mellon Investment Management e sono lieto con i miei colleghi qui in sala di darvi il benvenuto oggi a questa sessione che vogliamo dedicare alla Cina. Abbiamo deciso di chiamarla The Chinese Dream, che è un po' lo slogan, il mantra del governo cinese. Abbiamo deciso quindi di fare un focus su questa parte molto importante del mondo. Avete visto che anche nei giorni scorsi ci sono stati degli incontri bilaterali ad altissimo livello tra Stati Uniti e Cina. Pensiamo che quindi sia un momento opportuno per parlare di come sta andando la nazione al proprio interno e di quali influenze può avere nelle altre economie emergenti. Quale migliore occasione di farlo oggi con due speaker di eccezione. Abbiamo qui per noi il signor Xu Sitao, arrivato apposta questa mattina da Pechino, ha viaggiato tutta la notte in tempo per essere qui con noi oggi. Ci teniamo particolarmente per capire qual è l'evoluzione dell'economia cinese e il suo impatto a livello globale. Poi abbiamo il collega della BNY Mellon che fa parte della società del gruppo che si chiama Insight, il collega Colm McDonagh, che invece ci parlerà di quello che sono le dinamiche, come la Cina sta cambiando e quali sono le implicazioni non solo per la Cina stessa ma anche per le altre economie emergenti. Come padrone di casa ho adesso un video da mostrarvi per ricordarvi chi è BNY Mellon e quale miglior cosa di farlo con una pillola velocissima che ricorda perché siamo una delle più grandi istituzioni finanziarie a livello globale.
Nel 1784 il nostro fondatore, Alexander Hamilton, ha dato vita alla prima banca degli Stati Uniti, The Bank of New York. Negli ultimi 230 anni sono nati nuovi stati, sono stati cancellati i confini e sono emersi nuovi mercati. Ma BNY Mellon è rimasta un punto di riferimento. Siamo cresciuti guardando sempre al futuro, investendo in innovazione e tecnologia. Oggi siamo il gruppo globale di servizi e di gestione degli investimenti che amministra 28.300 miliardi di dollari, un quinto di tutta la ricchezza globale. E siamo tra le prime 10 società di investimento al mondo, con 1.600 miliardi di dollari di patrimonio in gestione. Siamo al servizio degli investitori in 35 paesi e su 100 mercati internazionali, ottenendo così una prospettiva unica sul mondo intero. Siamo BNY Mellon, un leader globale al vostro servizio.
Ecco, come diceva il video, siamo una delle principali istituzioni finanziarie a livello globale, non siamo una istituzione antica, siamo un'istituzione con esperienza, ci pregiamo di dire che la nostra banca è stata fondata addirittura 8 anni prima che venisse coniato il dollaro americano, quindi abbiamo visto molti cicli economici, molti presidenti americani, pensiamo di essere nelle migliori condizioni per cercare di passare a voi quelli che sono i nostri messaggi per quanto riguarda gli investimenti. A questo punto darei la parola al collega, al Mr. Sitao. Come dicevo, Mr. Xu Sitao è partner e chief economist di Deloitte China. Ha speso 10 anni della sua carriera come rappresentante in Cina per il gruppo L'Economist e precedentemente aveva avuto un'esperienza nel settore bancario avendo lavorato nell'ambito della tesoreria di Standard Chartered. Quindi quale miglior speaker per parlarci di cosa sta accadendo visto al proprio interno in Cina e quali sono le dinamiche che possiamo evidenziare per quanto riguarda tutti coloro come noi che ci occupiamo di investimenti. Abbiamo creato anche uno spazio per le domande alla fine delle presentazioni, quindi vi incoraggiamo a fare le domande anche in italiano, ci sarà un servizio di traduzione per i nostri speaker. A questo punto vi ringrazio e passo la parola a Mr. Sitao.
Good morning, ladies and gentlemen. First of all, I would like to thank BNY Mellon for inviting me to Milan to talk about China. When I look at this crowd, actually I was quite excited because when I realized the finance minister turned up late and Martin Wolf was negative on everything. I didn't know so many people will come to listen to the Chinese dream. This session is Chinese dream. I have my definition of the Chinese dream, which is slightly different from the official term being used by the Chinese president, which I'm going to talk about toward the end. This session is about the Chinese economy and the global impact. As you know, I don't know whether you've all been to China, but I would assume you know Chinese economy is the second largest economy. Within 10 years, is likely to surpass the US economy as the largest economy. China is also the largest trading nation, bigger than Germany and the United States. I assume you know that. Maybe you do not know China is also the largest provider of savings or liquidities. That is the beginning. I think that would remain the case for many, many years to come. If we look at the changes of Chinese economy, this chart clearly shows the growth has been strong, but also has been moderating. When we say new normal, really means the past growth rate, whether 8%, 9%, no longer realistic. But unlike European countries, we still see a lot of room growth. So I see the medium-term growth rate between 4 to 5%. I think that can be achieved quite easily. I have chosen 3 historical events. One was Asian financial crisis in 1997, when the Federal Reserve was raising interest rate aggressively, when the dollar was getting stronger, when China was small in 1997. China was quite small. China in Asia was smaller than Italy to Germany. So today, China in Asia is bigger than Germany. Germany is like Japan in Asia. So as you can see, 1997 was a defining moment. China decided to keep the growth rate above 8%. At the same time, not to devalue the currency. Not to devalue the currency also because China saw herself in the long run as a leader in the region, as more than Germany, and today China is actually more than Germany in Asia. So that's one episode. The second episode was crisis in this part of the world, and also subprime crisis. And China had a large stimulus package in 2008, 2009. The reason I have chosen these 2 important events, because in the past, China could just stimulate the economy because the demand in developed countries, including Italy, was unlimited. So China could export her way out, but that's no longer the case. Now, if we look at the Chinese economy in greater detail, as a native Chinese, I look at myself saying, what is the biggest mistake I have made in past few years? I actually feel I have been consistently underestimating the strengths. Auto market, the new thing is not a typo. It came from the book, Michael Lewis' book on Silicon Valley, the new thing. Cars are the new things in China. Last year, no one could see car sales went up by 14% with very, very high base, how high it is. Right now, the car sales is roughly twice as big of United States. Next year, I would say it will be 30 million, 30. Someone remind me, when I say 30, people may think it's 13, 30 million cars. Now, if you think about the car market, it actually came from low base. In 1979, 1980, 2 years after China started economic reform, annual car sales was 7,000. So from 7,000 to 30 million. Okay, so that's sort of the journey China has been on after economic reform. Why the market is booming? I give you a few reasons. Younger Chinese, they are more confident because unlike older Chinese, they are no longer have the aversion to credit. Secondly, it's still a young market. If you go to Beijing, Shanghai, you will understand. If you buy a car, it's difficult. You have to go through lottery system. You could wait for 5-6 years. So the demand is actually not being met. The car culture is being developed just like United States. So some young Chinese, they take cars on high-speed rail because they cannot race the Italian cars in Beijing, Shanghai. They go to remote cities. Housing market is another example, not on this chart. Last year, Beijing's property market was up by 40%, 40. Shanghai probably by 30%, 30. Shenzhen, that's China's Silicon Valley, up by 25%. So when we look at this economy, I think it's quite easy to draw the conclusion. The consumers are just extremely resilient because consumer debt is very low. Consumer debt is very low. Now, coming back to the external environment, in the past, China didn't have to pay attention to the rest of the world. No matter what China produced, the rest of the world would buy. Today, that's no longer the case. In your country, other developed country, Chinese products market share is actually close to 15%. That's a risk of protectionism, whether you have Donald Trump or no Donald Trump. When you are very big in a market, at some point, people just don't like you anymore. So that is the risk. The other point actually I want to make is on this chart, if you read this very carefully, I only put up short-term interest rate United States, bilateral exchange rate between China and the US, and unemployment rate in the US. You can draw many conclusions. I think the most conclusion we want to draw is without China, imagine if this world without China, I would say short-term interest rate would be at much higher level. I don't know whether you share that perspective. Bernanke, the former Fed chairman, called this global saving glut. I very much agree with him. It's really because of Chinese culture. They just want savings. If you talk to Chinese, they all want to become landlord. They all want to have some yield. And they are quite happy with relatively lower yield or hurdle rate comparing to their Western counterpart because they simply derive more pleasure from saving. So that's what I'm trying to argue from this chart. Now, why US is really a key. I understand, I mean Europe, why I keep talking about US, because that's how China sees the way. So US is still the biggest influence. I think what has happened is since the 8th of November, surprising victory by Donald Trump really create this, well, actually making the fight for global capital more intensive. I would argue that would remain the way. If US is trying very hard, I think other countries, they have to follow. And in the end, what does that mean for China? I think in the end, China has to open up the market in a more meaningful way. I didn't know what Martin Wolf was saying in the plenary session. I know him a little bit. I do read his columns. But I suspect what Martin Wolf was saying was because China's delay or procrastination of reform, meaning tightening belt, reducing corporate debt, eventually there will be a crisis. I suspect that's his key message. My view is the following. I think China can muddle through, but China has to reduce or has to give up some of these goals. So for example, one goal is GDP growth rate, 6.5%. The other goal is a stable exchange rate, 7 against US dollar. The other goal is relatively stable money supply, 12%. And another goal is, I don't want you to talk about other goals. And my policy recommendation is to give up the goal on GDP growth rate. China doesn't need 6.5%. If we turn that into maybe something 5.5% or 5%, then the policy leeway will be much greater. So that's, see, I mean, just bear with me, right? Because the slide's in Italian, so I'm trying to find English translation. I need to figure out what this, so this is China's exchange rate. This has been a very topical issue because in the past 2 years, Chinese currency has turned from a very strong currency to a relatively weak currency. So I would like to make the following point. The first point is, in the long run, Chinese currency has been a strong currency from 90s. But in the past few years, all currencies devalued against US dollar, but China didn't do that. So I think China has to do that just to satisfy market expectations. That's the first point. Second point is, China, unlike Italy, China is a bit like Germany or Japan, is a creditor country. So other people, they owe China money. China doesn't owe other people's money. So China is better off to have a relatively weaker currency. That's my second point. And my third point is, a lot of the measures right now taken by Chinese authorities, for example, Chinese companies are no longer allowed to come to Italy to buy Italian football clubs. And Chinese companies are not allowed to buy certain real estate property project. And all these controls, in my opinion, they are not sustainable. The reasons are the following. First of all, as a very big trading nation, a lot of these measures would produce economic pains. For example, if I'm doing trade finance, I may face legal dispute. If I were a big company, BMW, I have global supply chain. Now the regulator has to verify every trade. That's just not feasible. So my prediction is these measures are short-term. In the medium terms, so they will be phased out. So I would like just to give 3 predictions. Then I just conclude what I'm going to say. Again, just I need to find the English version because this is Italian English version. Okay, where's my English version? Okay, there are 3 points. The first point is, in China, a lot of people were anticipating something good to come out from Sino-US meeting, which took place in Florida last week. We call that grand bargain. Grand bargain meaning maybe we give up North Korea, you give up Taiwan. A lot of people in China see that way. And great bargain meaning when we have this one belt, one road initiative, maybe US companies can be part of that. And if US wants to invest in more infrastructure, maybe Chinese companies can get involved. So this grand bargain did not take place last weekend, but at least I think the result was better than many people expected. And Donald Trump, even though he said, I got nothing from Chinese, but Chinese leaders said there are 1,000 reasons for China and the United States to be friends. So that's my first point. My second point is, this is coming back to the second session with the RMB exchange rate. I think RMB exchange rate is likely to remain stable until October 2017. Why October 2017? Because there is a very important event, 19th Party Congress. And after the 19th Party Congress, we will know the future leader, Xi Jinping, whether he is going to abandon the collective leadership, whether he is going to say, I need to be in power for another 10 years, another 15 years. There is a likelihood, but I don't think Chinese leader will become someone like, I don't want to be in trouble. I don't think he will be like Mussolini. I don't think that's the case. So I think in today's China, economy is very open. Young Chinese are becoming more depoliticized. I think the Chinese leader, after they accumulate power, I think they have to distribute power. The other point I want to make is, if you look at China's economic reform in past 30 to 40 years, it's always about left versus right. See, the whole country is big, 1.4 billion people, left and right. Economically, we have to be on the right. If we are not on the right, there will be trouble with the United States. There will be trouble with Europe. And if you are not on the left, China, I can't imagine. I mean, we don't want to go back to the socialism. So economically, you go to the right. And politically, you may have to go to the left just to create a balance. I think that's also related to the Chinese dream. Because economically on the right, politically on the left, sometimes from foreigners' perspective, this is like split personality. I forgot that's a German word. I mean, it will come back to me again. But I do think after 19th Party Congress, there will be East control. This is my second point. And the third point is, I think in the short term to medium term, China will be moving away from collective leadership. There will be profound implications. We can talk about that later with the moderator. But again, my 3 point is Chinese economy is resilient, but the political risk cannot be underestimated. So in a nutshell, this is a country, I think, with relatively good economy, but maybe bad politics. But do you want to have a bad economy and good politics? I'm not too sure. At least this is better than the second combination. Thank you.
Bene, come vi dicevo, una prospettiva un po' diversa forse da quello che conoscevamo della Cina. Adesso poi il signor Sitao è a disposizione anche per le domande. A questo punto però passerei la parola a Colm McDonagh della società Insight, parte del gruppo BNY Mellon. Colm è responsabile della gestione dei nostri fondi obbligazionari specializzati nei mercati emergenti, quindi sia dei fondi che investono in obbligazioni governative, sia fondi che investono in obbligazioni societarie con anche un investimento nell'ambito delle valute dei paesi emergenti. Colm ha preparato per noi una presentazione su come la Cina sta cambiando e anche quali conseguenze questo cambiamento porterà alle altre economie dei paesi emergenti, non solo delle economie che hanno una vicinanza geografica con la Cina, ma anche le altre economie emergenti che registriamo al mondo. A questo punto passerei la parola a Colm per la presentazione e dopo ci sentiamo per le domande.
Thank you, Marco. Imagine if you were born in China. Your perspective of the world would be very different to what your perspective is today. You would think about people you want to trade with, what countries you might want to travel to. You'd perhaps think about your political environment, what opportunities and threats. It's all very different from what we're used to in the Western world. This session is focused on looking at China in a different way. We're looking at the reflection of China as it applies to other emerging market economies. So it's almost like we're looking in the mirror to see what impact that has for us as investors, both today and over the next 10 years. We're going to examine this in 4 distinct ways. First of all, we're going to look at growth. What does that mean for the global economy? Secondly, we're going to look at the political implications, particularly across Europe, the emerging economies, and the Americas. Sorry, this part is about politics, I guess. My Italian is not very good, I apologize. Again, we're going to examine this from a political point of view. We're going to examine it from a monetary policy perspective, because these all will have major implications for what you, as an investor, will do going forward. The first thing to look at is in terms of growth, to really understand how important is China today. This chart is from the bank HSBC, and I think it describes very well China today. On the left axis, you can see the percentage growth rate. On the bottom axis, you can see the amount of GDP in dollar terms. Now, what's interesting about this is that China, an economy of roughly $10 to $11 trillion, a growth rate of 6.5% is more meaningful for the global economy than the US with a growth rate of 2%. Therefore, growth in China today is one of the big reasons that the global economy is doing okay. Of course, when you do get some growth taking place in US or in Europe, then you can actually make some attractive arguments for the emerging market asset class. Watch carefully some countries like India, which over time will increase their component of GDP and their growth rate. But the reason we use this slide is to point out that America is no longer the biggest driver of what happens politically and from an economic perspective across the entire emerging market regions. To look at this in a little more detail, look at the analysis of who do emerging market countries trade with. So again, on the left axis, you can see the amount of dollars in trillions. On the bottom axis, you'll see each of the major economies. Back in 2002, as you can see, emerging economies traded mostly with the US, Japan, and DM stands for developed markets. So what I want you to focus on next is the Chinese component and the emerging market other, which is at the very far side. In 2016, that's a completely different component. And that's over a very short period of time. So let me show you that again. Back in 2002, clearly the US was very important. But today, China and other emerging market economies are much more significant. One of the many reasons for this, from a Chinese perspective, and why this may continue, is one of the initiatives that the Chinese call the One Belt, One Road policy. Let me explain how that works. Just over 3 months ago, a train arrived in London that had come directly from China. Just think about that. They called it the East Wind. Imagine the possibilities of being able to trade both people and goods from mainland China to mainland Europe on a consistent basis. The possibilities are quite extraordinary. I think it's also important to think about the number of countries that this train passed through on its way to London. So here you can show I went through places like Kazakhstan, Russia, Poland, Germany, and France. So even though it's a remarkable achievement that you could actually put some goods into a train in China and for it to end up in London, it's the number of countries that it passes through which I think will have a much greater effect on the global economy. And this is going to affect, in current measurements, about 30%. So that's 30% of the global economy. And the amount of investment that this trade route will use is going to expand significantly over coming years. Let's look at that in a little bit more detail. This map shows you the One Belt, One Road initiative. The red line shows you the land-based trading route. So this is almost a return to the old Silk Route of many years ago. We also have a blue line, which is the maritime or the sea route. And China is very seriously developing these two different trade routes, and this will have multiple implications for countries along this. In order to build the infrastructure for this, think about it from a land perspective. You start off in China, but you need to build the infrastructure, so roads, train tracks, all the associated utilities. So what happens? Well, you start lending into these economies. You hire workers to build it. You start paying these workers not in dollars, not in euros, you start paying them in renminbi. And this is a number of different implications. Of course, from a sea perspective, it's a little bit different, but the sphere of influence is changing. And for China to build these trade routes all the way through Southeast Asia and Africa will materially change the landscape of global growth and global trade, and significantly, global influence. There are 4 different components of this. Clearly, the investment that's required for these trade routes to actually occur. The second thing is political sensitivities. If you are from Mongolia, history teaches us that you're very sensitive about Chinese coming onto your land, for many reasons I won't go into today. But the entire region, all the way through Central Europe and Asia, the political situation will change and there will be sensitivities. Some countries will welcome this investment, some countries will not welcome this investment. So there's a huge amount of work to be done in order to achieve this. The third component is about currency. And I'll touch on this in a moment, but the implications of building these different routes means that currency, the Chinese renminbi, will become a global reserve currency over time. And that is very significant. The final component is bond markets. If you think about how you finance much of this investment over time, some of these countries will also look to invest in this infrastructure, and they will issue debt or perhaps some equity to finance this. The question I have for you is, will it be issued in their own currency, or will it be issued in renminbi? I think it will be a combination of both, which we'll touch on in a moment. What does it mean for China to be a reserve currency? Well, people have talked for a long time about the privilege of the US dollar being a global reserve currency. And what does that privilege really mean? Well, it means that for many decades, the US has been able to raise financing at a lower level than other countries. It means that they trade with other countries in their own currency. And it also gives them soft power. That soft power is a very important thing. Let me give you an example. If you were to walk into a restaurant in, say, Brazil, and you didn't have the local currency with you, Brazilian real, instead, I'm pretty sure you could pay for your lunch with US dollars. You might be able to pay with it with euro. You certainly cannot pay with sterling. But in years to come, across many countries, you will be able to pay in renminbi. And in fact, that's going to happen much more quickly in the countries that are surrounding China and that will be part of this One Belt, One Road infrastructure policy. Recent events. Renminbi has been included as part of the IMF's SDR basket. What that means is that every central bank in the world will have to increase the reserves that are held in renminbi. It also means from an investor perspective, we are now getting bond mandates as a firm which require us to mimic this SDR basket. So we as bond investors are now forced to go onshore in China to invest in the government bond market. The implications of that? Well, currently today, offshore investors have approximately 125 billion of investments onshore in China. But by the fact that they're becoming included in global bond indices, then the potential flow over the next very short period of time could be as close to $500 billion, so almost $500 billion. So this is what I mean about renminbi becoming a reserve currency and why it's so important. There are an awful lot of added benefits for your currency to be included in the global financial landscape. If you do not have a fully functioning domestic financial system, or one that is easy to access, then you cannot support a global reserve currency. So that means your domestic market needs to be accessible internationally in order for this global reserve status to continue. The other possible implication is how renminbi might become a new offshore bond market. And let me remind you of the euro bond market, which many years ago, people were looking to tap into the amount of excess US dollars that existed in Europe. And the first bond to do so was, in fact, an Italian bond. So just as a reminder of what a euro bond is, it is a bond issued by a company or a government not in its own country and not in its own currency. Why is that important? Well, if it was issued to capture the excess dollars in Europe, over time, we think there will be a bond market that will be created out of the need to tap into the excess renminbi savings that we will see, not just in Europe, but right through the rest of the world. And that's going to be a very important market for investors to keep a close eye on. The Eurobond market today is worth over $5 trillion. So just imagine over the next 10 to 15 years the size of this offshore Chinese market will be. As bond investors, then we have to make sure that we are ahead of this. And it means that we have to focus on what different types of risks we will seek for our investors and how we will manage those risks. But to explain what we face today, let's look at the size of the bond market of China today. There are three components. The first one is the onshore bond market. And as you can see, it's over $9 trillion. So it's the second biggest bond market in the world. My question to investors in this room who invest in bond funds, how many of you have exposure to the second biggest bond market in the world? Probably even far less than you think. The components of that bond market, which is denominated in renminbi, is predominantly government bonds or government-owned entities or financial companies. Access to this market is increasing. We spent a long period of time and a lot of money on lawyers to ensure that we could access this market because our institutional clients demand that we replicate exposure in this market. It's becoming easier over time. And perhaps over the next 1 to 2 years, it'll be much easier for everybody to access this type of market. The second bond market is the offshore, predominantly dollar-denominated market. As you can see, this is typically between corporates, financial institutions, and government debt. And it's significantly smaller. And it is all denominated in US dollars. The third market is what's known as the dim sum market. And this was the offshore Chinese currency market based in Hong Kong. We think that this market is going to disappear. One of the first bond issuers in this market, I think, was McDonald's, where they issued a bond in local currency, but it was the offshore version of that local currency. And we think that will disappear over time because it's becoming much easier to access this market. But in terms of accessing Chinese risk today, as asset managers, already we can do that. And again, we're thinking about China over the next 5 to 10, even 20 years. The existing corporate bond market, of which many of you, I'm sure, have read a significant amount in the press, is demonstrated here. And this first chart shows you the rating breakdown. The reason we use this is to show you that actually over 3/4, so over 75% of this market is rated investment grade. Now, you read a lot of press in the last 2 years looking for the next big blow-up in the Chinese bond market. And we don't necessarily agree with that press. There are certain areas of this enormous market which, of course, like anywhere else, you need to be very careful. But overall, this is a significantly high credit quality in this particular market. If you look at the sector constituents, this is where it gets pretty interesting because, yes, you have predominant issuance taking place in financials or in the real estate. And of course, in the real estate, we are quite cautious. But in all these other segments here, you will see continued development and issuance from the consumer side. This is the next biggest growth trend in markets. And I think this is something that we all in the West need to really appreciate. To show you an example of this, we're going to take a view on something like beef consumption. So as an economy grows, people over time tend to increase their spending habits. And one of those is increasing the amount of protein in their diet. If you think about the biggest beef producers in the world, we've listed them in this particular pie chart here. But next, let's look at the amount of consumption, or the growth rate in the amount of beef consumption or meat consumption in China. And it's pretty significant. So this is what I mean about looking at China in a reflected way. Let's look at the impact on the rest of the world. Well, already today, we can identify some of these producers, and we can make investments in some of these because they are delivering to an increasing consumer market in China. As you mentioned earlier, the increase in the amount of cars being bought and produced in China. This is just another segment of consumers who will become the dominant force or the marginal spending force, we think, economically in the world. So to finish up, let's reiterate the points that we feel quite strongly. China and its emergence and its infrastructure policy is going to have significant effects on monetary policy, on valuations, and also on politics. So we need to be ready for this, and we need to try and take advantage of this. The second thing is that Chinese investment, both private sector and public sector, will soon dwarf anything that comes from the West. In recent years, China has been the biggest official lender into Latin America compared to all of the US and Europe combined. That is a material shift in both politics and financing over the last 40 years. As asset managers, we need to look at these trends and understand that the way we manage bonds and bond mandates will change, and our expertise in each of these sectors, particularly in renminbi-denominated bonds, will have to get even stronger. I suppose the final moment, if I've not repeated myself in Italian, is that we're already investing in these types of opportunities already today, investing onshore in China, investing in some beef companies, investing in currency like renminbi. This is going to accelerate over the next 5 to 10 years. Thank you.
Grazie Colm. Adesso apriamo la sessione per le domande, che saranno moderate dal collega Andrea Curiat. Volevo ancora ringraziare Deloitte anche tramite l'ufficio di Hong Kong che ci ha fatto da ponte per avere qui con noi oggi il signor Xu Sitao, quindi grazie ancora a Deloitte. Ci sono delle domande per i nostri... C'è una domanda qua.
I have a question for Mr. Sitao. We in the West are often very worried about what could happen in China. We talk about bubbles, about lack of transparency. Probably we're not able to understand how China works, also because, in fact, you have capital control. You have in the hands of your government a lot of more tools than we have here. So what do you think about this? For example, about the real estate bubbles of these huge empty cities that apparently represent an enormous burden on the economy? Thank you.
Okay. Thank you for the question. a lot of people, even in our organization, for example, I don't want to name names, certain big countries, they want to have the contingency plan. What if China falters, not necessarily collapse, but just stumbles, what's going to happen? So these are my answers. First of all, China is never transparent. China is always opaque because of politics. But as China is becoming more internationally integrated, I think it's more difficult for political leaders to lie, because people like them, he will draw the conclusion, dim sum bond would disappear. There's a good reason. That represents a market force. So that's my first point. My second point is, right now, leverage is a very big issue in China. Many years ago, leverage was hurting Italy. In the 90s, leverage was hurting Italy in 2011. So this is a China's situation. Debt, GDP in China, 280%. Enormous by Italian standard. But we need to look at that more carefully. If we look at it more carefully, consumers, only 40%, meaning consumers have a big scope to borrow, to leverage, because consumers are unlikely to default. Secondly, in China, you have Italy, you have Germany, you have Spain. But there's no dispute, argument between China's Italy and China's Germany. China's Germany is Shanghai. China even has Turkey. But China's Germany will always bail out China's Italy, Spain, and Turkey. So the total government debt is manageable. The problem is corporate sector, to be more precise, state-owned enterprise. That's a political question. You need privatization. So my answer is China can still model through. But the first step is to slow down. That's very important, because slow down meaning reduce leverage, reduce money supply growth rate.
C'è un'altra domanda.
Funziona?
La traduzione
Grazie.
non c'è.
Posso fare una domanda in italiano?
Sì.
Sì. Alcune banche europee si stanno consorziando in previsione della creazione di una criptovaluta europea. Come vede la Cina, qual è l'atteggiamento della Cina nei confronti della criptovaluta eventualmente propria?
No translation.
There is no translation.
Sorry? Oh, okay, Bitcoin.
Scusate,
No,
ci
I
sono
can't.
dei
Yeah, I
problemi
can
di
hear you now.
traduzione.
Yeah.
Cryptocurrency.
It's like a Bitcoin or
Oh, yes.
blockchain.
Yeah, that's another very good question, because for anything related to blockchain or Bitcoin, I believe that is a trend, because financial institutions are driving that, and financial intermediation, well, doing that on behalf of real economy. I think China has to embrace that in the long run. But in the short term, policymakers are reluctant, because for older people, it takes time for them to understand blockchain, Bitcoin. So in the short term, China is reluctant. But in the medium term, China must embrace that. Now, let me give you another prediction. My prediction is within 10 years, the best fintech companies will be all Chinese companies. The reason is very simple. Very little infrastructure investment, and the traditional financial institutions in China are doing a lousy job. So internet companies are developing. And thirdly, payment is already the biggest thing in China.
But actually, I'd sort of add to that by saying that currency regimes typically never last more than 30 years. If you go back through history. So yes, the US dollar or the British pound has been around for some time, but they've gone through very different life cycles. So when it comes to a cryptocurrency, if you think about how today you behave, most of what you use is your phone or your card. It's not real money. So therefore, feeds into your point about older people like to have, what is money? It is a unit of exchange. It's a store of value. So when they can feel that, they put it underneath their mattress. But the world is changing. So I think most regimes are going to have some kind of cryptocurrency. The real difficulty is, how do you control that? How do you monetize that? How do you ensure that trade happens and there's no leakages? That's going to be the real challenge. But I tend to agree with you from a technical point of view. In China, there's a completely different experience. People don't really use credit cards as much. They just use their phone for everything.
Thank you, Colm. If there are any other questions, se ci sono altre domande.
Good morning. Many thanks for your speeches. And I have understood more that we have explained about China. But I have a near to bad question. What do you think about I repeat, if China continues to export with a dumping price, it will be the dream only for them, only for China, but not for Europe. And do you think about Europe to apply some custom duties?
Dumping, right? Dumping, yes. So this was what happened. In the past, China was small. So when China was exporting to Europe, no problem. But today, in almost all industrial sector, China is dominant, whether shipbuilding, steel, aluminum, white goods, brown goods, you name anything. For example, refrigerator. China accounts for 70% global production. So the implication is, if China does not make money in one sector, no one will make money. That is a source of protectionism and anti-dumping. I think that is why I think China should slow down. But there is a problem. I think this is also in Chinese culture. We are good at making small things big, but we are not good at making big things small. So I think we could see more problems from Europe.
Thank you.
But you always get protectionism taking place if markets don't work effectively. So the previous question was talking about capital controls and China being an economy hard to understand. If you look at many developed markets in the US or Europe, remember when shorting was banned on European stocks through the crisis? Do you remember when QE took place? These are distortions that take place in markets. So actually, history teaches us that when markets become unmanageable, then you get some of this either protectionism or further rules that kick in. So I don't think that's any different from a trade perspective. And again, it just depends. But I can see a world whereby China points more inward to domestic consumption rather than exporting, which it has done for the last number of years. But I think over time we're going to see little elements of protectionism or distortions in markets. It's always been the way through history.
Abbiamo forse tempo per un'ultima domanda. se ce ne sono, altrimenti ringrazierei... Prego.
Just a second question to your answer. In fact, you were saying that, in fact, for you it's important that China slows down because this will rebalance the economy. But don't you think it will create another huge problem? Because each year there are a number of people who graduate or who exit the school and need to find a job. Or, as you said, there are a lot of inefficient state-owned companies which must reduce their employees. And so if the whole economy slows down, then you will probably have unemployment and social instability and all the consequences.
As the economy is being transformed, services becoming more important, just like in Italy or other European countries. Services, they generate more jobs, but services may not generate a lot of GDP. A typical example would be someone cutting your hair. It's probably the same person, but you are paying him or her many times more than 10 years ago. Why? Because you value experience more, you value services more. So politicians in China, they also need to make such changes, not just producing concrete goods, also services. So it takes time for them to change. Secondly, new economy is generating more jobs. But if you want to maintain high growth rate, meaning you put resources into old economy, you are hurting new economy. The final point, demographic changes. Chinese women getting married late. They don't want to have second child. So I don't buy the hypothesis, if the growth rate coming down, there will be unemployment. So that's my answer.
Colm, if you would like to add.
Any economy has exactly the same thing. You fix infrastructure. That infrastructure creates productivity. That productivity means that people go up the value chain or they engage in services. We've seen that in every economy globally. Why is China different? It's not. I think China is one of the few economies in the world that's actually engaging in reform today. So I think they're going to move up much more quickly than people probably estimate. Everybody is waiting for China to fail. That seems to be a very...
Jealousy.
Well, it's a very Western perspective because it is a hard economy to understand.
Yeah.
And yes, there are some problems with bad debt in certain parts of the banking sector. But name me a developed market country that doesn't have those problems. So I actually think, no, China is one of the few countries trying to address this. And we ignore the pace at which this is taking place. And it's to our detriment if we do so.
Grazie mille. Thank you. Grazie mille a tutti, grazie Xu Sitao, grazie Colm McDonagh e Marco Palacino per i loro interventi. Grazie a voi per essere rimasti con noi sino al termine. Ci trovate al nostro stand di BNY Mellon Investment Management per ulteriori informazioni, domande, dati su fondi e anche per scattare qualche foto divertente nel nostro stand. Grazie mille.
Siamo stati chiari ed efficaci.